Hey everybody, my name is Mick Attardo. I am a teacher advocate and the president of Set Sail Insurance Group. Today I quickly want to go over a product called Term Life Insurance by a company called The Standard. If you're a teacher, I'm sure you've heard of The Standard. They're actually the officially endorsed company for disability and life insurance by the CTA, that's the California Teachers Association. So if you're a teacher or you're employed by CalSTRS or CalPERS, I'm sure you've definitely heard of them. Now, the reason why is because, they go to all their events. So, teacher orientations, any kind of union-sponsored event, typically this CTA will have The Standard there. And the reason for that, I think, has more to do with the fact that the Standard, gives a lot of money to the union and to also local unions in the form of donations each year to get that face time with teachers. I think it has more to do with that than how highly rated they are as a company or the competitiveness of their products. Now, this isn't to bash the Standard or the CTA or any of those entities. I'm just trying to explain the politics of how this works as bluntly as possible, because we live in a world where money, dictates a lot of things, and very pay to play kind of situation. I know this because I did it too. So without getting further into that, let's kind of get into it. If you're not really familiar with how term life insurance works, typically you're going to pay a set rate for a specific amount of time for a specific amount of death benefit. Now, if you pass on within that term limit, your beneficiaries receive a lump sum. But if you outlive that time, you get nothing, and all that money basically just went to the insurance company. And that's how they generally make a lot of their profits, is from term life policies. Now, the Standard, their term life policy doesn't work that way. I actually found out about this from a client of mine who called me concerned. He said that, hey, my term life policy, the cost is increasing, and I want to know why. And I go, really, that's strange. That doesn't sound like a typical term life policy to me. So we did a little research, and actually it was pretty easy to figure out. If you look at the CTA handbook, it says right on page 15 how it works. So basically what it says is it's an age-based premium, and the rates increase every 5 years. And now if you look at page 16, it gives you a nice graph explaining those rates and their increases every 5 years. It actually ends up being pretty astronomical, which I thought was really surprising. Now there's a couple other things as well. So your death benefit actually reduces by 35% once you reach age 70. So you can only get 65% to your beneficiaries if you pass on after age 70. And it reduces further the older you get, and it shows that in your handbook as well on page 15. To make it a little easier to wrap your head around, consider the following example. If you hypothetically took out a $400,000 policy at age 30, paying a premium of $30.55 per month, by age 70, your monthly premium would have increased to $440.73 a month, and the death benefit would only be worth $260,000. I thought that was very strange, and especially considering the fact that it costs more the older you get and your benefit decreases. That just doesn't seem like it makes a lot of sense to me. But that's not all. Okay, so there's additional features of this I want to cover real quick. So a lot of life insurance policies now include things called living benefits. This policy comes with a terminal illness rider. It's on page 17. It explains what that benefit is and how it works. Basically, if you're diagnosed with 12 months or less to live by a medical professional, you can receive up to 80% of your death benefit for yourself to use for whatever needs you need. So whether that be to, just go on vacation and live out the rest of your 12 months as best you can with your family, or whether it be to use experimental medications that maybe your insurance doesn't cover. A lot of people have done this in the past successfully and kicked their cancer. Now, this might sound like a great benefit to you. However, if you compare that terminal illness rider with other companies who also offer it, you might find that it's actually not that great. As an example, there are several companies that offer this rider with an additional year of coverage and with more than 80%. I've seen upwards of 90 to almost 100% of your death benefit that you can give to yourself within 24 months. So if you're diagnosed with a terminal illness and you have 24 months or less to live, so that's an additional year to utilize this benefit, you can pay yourself almost 100% of your death benefit to utilize for those other things I just mentioned. That's a huge difference compared to this policy here. And the reason why I even found out about this was because my client, contacted me and wanted to understand why his rates were increasing. So once we found this out, I said, hey, there are other companies out there that might be a better fit for you. So we explored some of those other options, and he ended up dropping this coverage and going with a different company. So if you have a plan with the Standard, whether it be term life or disability or some other thing, it might be in your benefit to talk to a trusted broker like myself to compare that plan or those plans with other providers to make sure that that's the best fit for you. It's pretty much my PSA to everyone when it comes to any kind of insurance, because really you don't know what you're paying for unless you can compare it to other stuff. Just like when you go to buy a car, you should really explore the different options you have before you choose one or the other. If you found this video informative, please press the like button and share it with your colleagues. And if you're curious to learn more information about the services that we offer, please feel free to visit setsailins.com. There you can schedule a free consultation. And we also offer pension reviews and a whole assortment of other services and different types of insurance for you to consider if you're in the market for disability or long-term care or covered California or life insurance. There's more than just term life or different kinds of annuities. So thanks for watching and have a great day.